Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. Before we get started, wanted to let people know to check out the show notes for useful links. Well, E&Y is in the news again. This time it's not for them trying to go public or split the firm, even though we will talk about that in other episodes. But today, E&Y is all over basically every news source possible for cheating, which is not good. NPR, New York Times, Wall Street Journal, everywhere is this story of E&Y employees cheating on their basically everything. But I think the biggest thing is the CPA exam, which I didn't even know was possible. But apparently it is. Apparently people just pulled their resources and figured out a way to cheat. I don't even know why you would do that. They make it almost impossible to cheat. Maybe it probably has to do with the pandemic, but I don't think it does because it goes back multiple years. And so, but this isn't the first time that we've had this happen to the Big Four accounting firms or why there's been cheating scandals before, but it's mainly on CPEs, which is what you need to maintain your CPA. But now we have people actually cheating on the CPA exam itself, which is pretty insane. But we could talk about the reasons why I think that is. But in some of these articles, they're saying that accountants are the people that are supposed or Big Four accountants are supposed to be the people that catch companies cheating, and now they're caught cheating. But these people did any research on their own, they see that the Big Four accounting firms do this very frequently. And I've talked about this on the podcast over the years about how you cannot regulate ethics. It's just not something you can do. And we've talked about how to do that. And I'm waiting on my paycheck from the Big Four accounting firms for them to pay me to help them overcome this. And it'll be a lot less than $100 million, and I bet I can solve it. I can't solve it completely, but I'm going to be a lot cheaper than $100 million, which is the largest fine ever by the SEC for the Big Four accounting firms. And that's the problem too. The Big Four accounting firms, and they get into these things, then they just become arms of the federal government, similar to KPMG after their tax thing, because they entered into these deferred prosecution arrangements. I don't think that's what happened here, but they had to pay $100 million, which is insane. And I'm sure the insurance company for E&Y is paying the majority of that. But you cannot regulate ethics. And part of the employees who were interviewed by the SEC said they knew that it was against the Global Code of Conduct. And you have to at E&Y because I think there's like 5 million checkboxes on everything you do because of past cheating scandals that you're not cheating on the thing. But apparently E&Y did it all the way back to as early as 2012, where they've had these issues. And people said that they knew this, but because of client requirements, that they just felt like they had to cheat. And to me, that's a bunch of BS. People are just getting lazy. People don't want to, I don't know, they don't want to try. And I don't even understand how the audit ethics part of the CPA is hard compared to financial. I think there's probably cheating on all aspects of it. There's probably cheating on CPEs. But I mean, if you're cheating on this type of stuff, then I don't think you should be an accountant. But also, I think these firms are just, I think they're hiring too many people in some respects. Or, I mean, they're winning so much work, but they're hiring so many people, and the money's there to be a CPA. And so people try to do it no matter what, and they don't want to wait. For some people, it takes a while. If you're in accounting school, they tell you to pass your CPA before you leave, if you can, because it's going to be difficult once you start. So there's all these warning signs that you're not going to have time to pass your CPA. And then from there, people get into the Big Four accounting firms and they don't have enough time to study. But to me, that's BS again. The Big Four accounting firms are pretty understanding nowadays as far as work-life balance. You shouldn't have to get involved in this. And it's not worth it either. It's not worth damaging your reputation. It's not worth going in your resume, etc., getting caught in headlines like this as potentially being a cheat. And I'm sure if you did get caught, you're not going to be able to be a CPA after that. But also, if you're going to cheat on the CPA, and definitely do not do that in any manner. Like, don't cheat on the ethics part. Like, come on. I feel like that's the ridiculous part of all these cheating scandals. It's always on the ethics thing that people cheat. So I don't know. It's pretty ridiculous. And the other thing is people at E&Y overall are going to suffer from this because bonuses will be less, etc. People are going to be overregulated now. You're going to have to check more boxes. You're going to have to attend more ethics trainings because that's all that comes out of this. There's going to be nothing new. There's going to be nothing new out of this. It's going to be the apology letter. Oh, by the way, we have more training. You didn't we had 1 million trainings on cheating scandals before. Oh, now we're going to have another one on top of that to make sure that you really, really understand cheating. The people knew they understand cheating. They just didn't have ethics. And it's the thing I've talked about in the past on podcasts on here is because there's no reward for ethical behavior within the big four accounting firms. I'll say that again. There's no reward for ethical behavior in the big four accounting firms. Yeah, you might get a little badge or something like that for completing ethics training, but there's no financial reward. There's no performance reward. How you're rewarded is how many hours you work, or how many sales you make, how many sales to clients you make. There is no reward for ethical behavior. There's penalties for not meeting certain requirements, like your bonus might go down. But again, those are penalties. There's no reward for doing ethical things. In the big four accounting firms, there's an overwhelming amount of regulations. The amount of things that you have to do on a daily basis. You have to do your timesheet. You have to make sure you're over a certain amount of hours. You have to make sure that you're independent. You have to make sure all your brokerages are hooked up. You have to make sure if you get a new brokerage that's hooked up, if you get married, that all of that is reported, that you check any securities that you buy before you buy them. So people are juggling all these plates. On top of that, they want to earn a bigger salary every year, and they're going to do what that takes. But to earn a bigger salary every year, you have to work a lot of hours. You don't have to perform ethical behaviors. You don't have to do ethical things. Those are a requirement, but those are not rewarded for continuous ethical behavior and going above and beyond. So I think the big four accounting firms are going to have to begin doing this. They won't do it though. There's no reason not to. $100 million is a lot of money, but this is the record year for the big four accounting firms. This is nothing to them in this current year. So, I mean, it might be a lot for E&Y US where this problem is coming from, but it's hard to regulate all these people, to get everybody in these regional offices. And it's the way the big four accounting firms are run as well, those partnerships. They're not run from the top down, despite what they may seem. It's run by these partners, and the partners don't really run it themselves. They're like, oh, look at the top firm. So it's a whole bunch of people pointing fingers at each other if the SEC wants to figure out how this stuff happens. And they're not going to change the way they run. They're just not. They'll put more training. I'll guarantee you there's going to be more training. There's going to be more check boxes. There's going to be more certifications. But I guarantee you every single person that did this, that worked at E&Y, checked those boxes, signed off on all those things. And it's not just E&Y. It's going to be the schools. The schools aren't teaching people enough about this. And even if you do learn it in school, once you hit the big four accounting firms, you see other people's utilization versus your own. You're seeing other people get better clients than you. Then you start focusing on that. You don't worry about ethical behavior. And let's say you see somebody cheating and you report it. What are the chances that person's going to get dinged or anything like that? Not very high. And it's going to be more of a reflection on you, and people are going to say you're lying. There's just no reward of this behavior, of reporting, of being ethical, etc. And another big thing too is that E&Y tried to cover this up, or they kept some of the information back. So it's not just these lower level people that are doing the cheating. It's the higher level people that are keeping the information from regulators. And the same thing happened at KPMG when they got caught in that PCAOB scandal. So that's another issue there. Another issue is that these people, that even the partners aren't ethical themselves. And it's tone at the top, which I'm sure people have heard before. And there's just there's just a lack of ethical behavior overall. But in this type of environment where you're chasing small margins, or I mean, the margins of the big four are high, but if you listen to the partners, you think they're super low, but they're just trying to make huge bonuses. And so they're just trying to pinch pennies on stuff. They're trying to get people to work that incremental additional hour over being more ethical, taking more time off, just doing a good job versus chasing an additional billable hour, doing more work than is possible. And then that leads to the environment where this happens. And I think it'll continue to happen. Not only this type of stuff, but where people don't catch stuff on clients, because why would you, when you have a strict deadline and you have so many clients, things are going to slip past people. So this is just the latest accounting scandal. Things won't stop until there's a change in the metrics of the way the big four accounting firms are run. And just wake me up when that day comes, because there's no sign it's coming anytime soon. There's the big four accounting firms are going to do the same things, and then the regulators are going to do the same things. They're going to come in and say, "Hey, we're going to look at you for this amount of years, turn over every single document. You can't do this, etc." Then years will pass, and then the same thing will happen, because that's the other thing about the big four accounting firms. Turnover is high, so the people that are here today are gone tomorrow, and all the people that'll remember, that'll have the company history of this ethics violation, will be gone very soon. So there's more to come on this. Let's see if E&Y changes their culture. Maybe if they do the break off, then that'll be a time to change the culture. And the spinoff has nothing to do with this. This is something else. This isn't a conflict of interest on a client. This is just unethical behavior. And I don't think spinning off will necessarily help, other than if it gives them a chance to change their culture. But it's just another ethical violation by the big four accounting firms. Not surprised by it. We'll see what comes of it if E&Y does anything other than press releases. And we'll keep you up to date on that. We'll keep you up to date on the EY spinoff and whether that's going to happen and when it's going to happen. So make sure to subscribe to this podcast, and thanks for listening.